Are you tired of chasing overvalued tech giants, only to watch their growth slow? What if I told you that the real wealth-building opportunities aren't in the headlines, but in the shadows? Savvy investors know that the next wave of massive gains will come from under-the-radar tech companies. Today, we're diving deep into 8 cheap tech stocks that analysts and hedge funds are quietly accumulating, poised for exponential growth. Stick with me, because I'll also break down the critical financial metrics in a comparative analysis that reveals where the real value lies. Number 1. Freshworks Inc. Ticker FRSH. Freshworks, a software-as-a-service innovator in customer engagement and IT service management, is gaining significant traction, reflected in its robust Q2 2025 performance with an 18% revenue growth and a substantial 65% surge in free cash flow. A major growth catalyst is its AI-driven product suite, Freddy AI, which already generates $20 million in annual recurring revenue and aims for 40% customer adoption by 2026. Despite a history of missing prior targets, analysts like UBS see a compelling valuation, projecting a 49% upside with a $19 price target. The company aims for over $1.2 billion in revenue and $340 million in free cash flow by fiscal year 2028, aligning with a Rule of 45 metric. Freshworks' strategic focus on the mid-market and continuous product innovation position it as a potential leader in its $80 billion addressable market, making it an intriguing, albeit execution-dependent, long-term play for investors seeking growth in software services. Number 2. Payoneer Global Inc. Ticker PAYO. Payoneer Global is solidifying its position as a dominant force in cross-border payments, particularly within the B2B sector, which surged 37% in the first half of 2025. Despite a slight Q2 EPS miss, the market reacted positively to its robust 16% core revenue growth and strong adjusted EBITDA margins of 25%, signaling investor confidence in its profitable growth strategy. Key partnerships, including an expansion with Stripe for its high-growth online checkout service, are rapidly accelerating its client base and revenue, now at a $1 billion run rate volume. With reinstated full-year guidance and an ambitious vision to become a comprehensive financial stack for global SMBs, Payoneer is expanding its market share through innovation, strategic geographies like mainland China, and significant share repurchases, offering a compelling 34% potential upside according to analysts. This makes Payoneer an attractive option for those eyeing the burgeoning global digital payments landscape. Number 3. Remitly Global Inc. Ticker RELY. Remitly Global, a digital financial services leader in cross-border remittances, is demonstrating impressive top-line momentum, with Q2 2025 revenue soaring 34.4% year-over-year. While Q2 EPS missed estimates, the company raised its full-year revenue and EBITDA guidance, signaling strong underlying growth. A significant strategic move is the launch of Remitly One, an all-in-one financial membership designed to deepen customer engagement and diversify offerings into products like Remitly Wallet and Flex. Analysts like William Blair highlight Remitly's ability to expand into adjacent financial products at low incremental cost, forecasting a 45% upside. Despite some analyst caution on short-term guidance and new lending products, the consensus remains buy or overweight, emphasizing Remitly's position as a robust secular growth story within fintech and suggesting attractive valuation relative to its peers. Its focus on widening financial services beyond remittances creates long-term value. Number 4. Aurora Innovation Inc. Ticker AUR. Aurora Innovation is blazing a trail in autonomous freight, achieving an industry first by operating commercial driverless heavy-duty trucks on public roads in Texas, surpassing 50,000 driverless miles. Despite recent stock pressure, Cantor Fitzgerald sees a staggering 100% upside, reiterating a buy rating and a $12 price target. The company benefits from being a first mover with an asset-light, high-margin model, supported by strong partnerships like McLeod Software for its transportation management system. Aurora maintains a robust $1.3 billion cash position, providing a runway until at least Q2 2027. With plans to expand capabilities to adverse weather and explore the robo-taxi market post-2027, Aurora's consistent technological progress and strategic industry collaborations position it for impactful, albeit capital-intensive, growth in autonomous transportation, making it a high-potential play for aggressive investors willing to stomach early-stage volatility. Number 5. DoubleVerify Holdings Incorporated, ticker DV. DoubleVerify Holdings, a leader in digital media measurement and analytics, continues to demonstrate robust performance, with Q2 2025 revenue soaring 21% year-over-year. Despite a slight EPS miss, the company raised its full-year revenue growth guidance, reflecting strong execution. Its highly profitable media authentication platform, boasting over 82% gross margins, provides a critical competitive edge in an evolving advertising landscape increasingly shaped by AI and large language models, creating new growth categories. Analysts, including BMO Capital, project a significant 42% upside with a $27 price target, citing DV's consistent product pipeline and diversified growth drivers in high-growth channels like connected TV and social media. With its volume-based model insulating it from ad pricing pressures, DoubleVerify is well-positioned to capitalize on the digital transformation of advertising, making it a compelling tech value play for the long haul. Number 6. SentinelOne Incorporated, ticker S. SentinelOne is rapidly becoming a cybersecurity powerhouse, recently surpassing $1 billion in annual recurring revenue for the first time, alongside a strong 22% year-over-year revenue growth. The acquisition of Observo AI is a game-changer, significantly enhancing its security information and event management capabilities and offering a unified, AI-native security operations platform that improves data management and reduces storage costs for enterprises. Analysts, including Robert W. Baird, project a 32% upside with a $23 price target, citing SentinelOne's strengthening competitive position and product differentiation. With strategic partnerships like Schwartz Digits for European markets and Pax8 for SMBs, coupled with innovations like its Purple AI and Flex licensing, SentinelOne is exceptionally well-positioned to capitalize on the increasing demand for advanced, AI-driven cybersecurity solutions, making it a high-conviction growth pick in the critical and expanding cybersecurity space. Number 7. Confluent Inc., ticker CFLT. Confluent, built on Apache Kafka, is a critical player in cloud-native data streaming, essential for the next wave of enterprise AI adoption. While Q2 2025 earnings showed strong beats on EPS and revenue, conservative forward guidance and a major AI-native customer shifting to self-managed platforms led to a significant stock pullback. This creates a potential buying opportunity. The company is actively reinforcing its leadership with a new CTO focused on real-time data and scaling, while its agentic real-time AI solutions, particularly Flink ARR, are experiencing tremendous growth. Despite near-term headwinds like weaker net revenue retention and consumption pressures, Confluent's expanding cloud platform and stream processing services remain central to its long-term strategy, with analysts projecting a 27% upside, making it a compelling, albeit higher-risk, growth play in foundational AI infrastructure. Number 8. Clearwater Analytics Holdings Incorporated, ticker CWAN. Clearwater Analytics, software as a service leader in investment accounting and analytics, is strategically targeting the booming $2.5 trillion private credit market with significant enhancements to its alternative assets solution. Its Q2 2025 results were impressive, with total revenue soaring over 70% year-over-year and annual recurring revenue up 83.4%. While generally accepted accounting principles net loss was reported, adjusted EBITDA showed strong growth and margin expansion. RBC Capital highlights a substantial valuation disconnect, seeing a 61% upside with a $36 price target, implying a much higher multiple, reflecting its growth trajectory. The acquisition of Beacon Platform and new functionalities like AI-powered fund research are deepening its capabilities in complex asset classes. With a $100 million share repurchase program underway and major client wins, Clearwater Analytics is well-positioned to capitalize on institutional allocations into private markets, offering a compelling growth narrative despite near-term profitability metrics. When you line up the raw numbers for these 8 cheap tech stocks, a fascinating picture emerges. Starting with the current price, Aurora Innovation is the most affordable at just $5.96, while Confluent is the highest priced at $20.16. What's most striking, however, is the market capitalization range. While DoubleVerify and Payoneer both sit around a $2 billion market cap, Aurora Innovation, despite its low share price, commands a much larger $11 billion market cap, signaling high investor expectations for its autonomous driving future. When we look at revenue, Remitly Global leads the pack with over $1 billion in annual revenue, followed closely by Payoneer and Confluent, both nearing the billion-dollar mark. In stark contrast, Aurora Innovation is still in its very early revenue-generating stages. Now for the profitability engine, gross margins. Freshworks with an impressive 84.33%, closely followed by Payoneer at 78.65% and DoubleVerify at 75.04%. These high margins underscore the inherent scalability and value of their software and services. On the flip side, Aurora Innovation's deeply negative gross margin highlights its heavy investment phase. Finally, let's talk about earnings per share. Payoneer, Remitly, and DoubleVerify are the only companies reporting positive EPS, showcasing their operational efficiency in delivering bottom-line profits. The other five, including Clearwater Analytics and SentinelOne, are currently posting negative EPS, which isn't uncommon for growth-focused tech companies heavily reinvesting in expansion and innovation. Understanding these numbers side by side provides critical context for your investment decisions. So these are 8 cheap tech stocks that are quietly building immense value and catching the eye of investors. Which of these cheap tech stocks do you believe has the best chance to deliver massive gains in the next 5 years? And why? Drop your thoughts in the comments section below. And make sure to check out our video right here on 7 best gold stocks quietly loading up on